If you receive SSI or care for someone who does, you need to hear this. Social Security is rolling out new redetermination rules and deeper bank account reviews, and these changes are already catching people by surprise. Some beneficiaries are being flagged for issues they didn't even know existed, and small mistakes are turning into overpayments worth hundreds or even thousands of dollars. Today, we're breaking down exactly what's changing, who will be checked first, how the new financial review system works, and what you must do now to protect your monthly SSI payments. Before we begin, please like this video, subscribe to Social Security Post, and if you have any questions about SSI, SSDI, Social Security retirement, or Medicaid, go ahead and drop them in the comments. I answer as many as I can. The SSI program has always required redeterminations, but 2025 through 2026 marks one of the largest policy shifts in decades. Traditionally, Social Security conducted these reviews once every 1 to 6 years, depending on risk level. But rising payment errors, outdated income data, and pressure from Congress have pushed the agency to create a more aggressive and data-driven system. Under the new rules, SSI redeterminations no longer rely only on mailed forms or self-reported information. Social Security is now increasingly using automated financial data, electronic wage systems, real-time employment updates, and monthly bank account scanning tools to verify income and assets. This change is designed to reduce improper payments, but it also means beneficiaries must be far more careful about how they manage money, deposits, and shared accounts. Another major reason the rules are tightening is because of the growing number of beneficiaries who unknowingly violate SSI's strict financial requirements. Unlike SSDI or retirement benefits, SSI is a needs-based program with hard limits. Assets cannot exceed $2,000 for an individual or $3,000 for a couple, and income must stay within tightly defined thresholds. Social Security's new systems don't wait for your annual redetermination. They can detect changes early, sometimes within weeks. The goal is to prevent long-term overpayments, but the outcome is that beneficiaries will face more frequent contact, more requests for proof, and more situations where a small financial change triggers a full review. One of the biggest changes is the expansion of bank account verification tools, which Social Security now uses far more often. The system cross-checks a beneficiary's name, Social Security number, and reported assets against real financial account data. These checks can occur during a scheduled redetermination, when someone reports a change, or when the automated system detects activity that looks inconsistent with SSI rules. The new system looks for things like balances above the limit, unreported deposits, shared accounts, reimbursements that look like income, or even accounts you forgot you had years ago. Many beneficiaries have already been contacted because Social Security's system found savings accounts, old credit union accounts, or small investment accounts they didn't realize still existed. These bank account reviews also include monthly monitoring in certain cases, especially for higher-risk beneficiaries. This means that even if you were below the $2,000 limit at the beginning of the month, a temporary spike, such as a refund, a friend paying you back, a stimulus payment, a tax refund, or even a rental deposit return, could trigger a notice. While some funds are excluded if properly documented, the review system does not assume anything is exempt. Beneficiaries must often explain deposits line by line. The purpose of this deeper review is accuracy, but the challenge is that many people live month to month and may not have receipts or documentation ready when Social Security contacts them. This is why understanding the new system is essential. One unfamiliar deposit can open the door to a full redetermination. Under the updated rules, redeterminations can now be triggered by more types of changes than ever before. The most common triggers include increases in bank account balances, wage changes, new living arrangements, marriage or separation, receiving financial help from family or friends, or any deposit that does not match your reported income. Even something as simple as adding your name to a family member's bank account, even if it's for emergency access, can be treated as if the funds belong to you. The automated system also tracks financial patterns, so irregular activities such as large one-time deposits or repeated small payments can raise a flag. Beyond bank activity, the system now pulls employment data every month from federal wage reporting systems. This means that even a part-time job, small gig work, or one shift of seasonal employment can trigger a review if you don't report it quickly. The new rules emphasize immediate reporting. Failure to notify Social Security, even for a small job, can result in months of overpayments. For many SSI recipients already facing tight budgets, unexpected redeterminations feel overwhelming. But knowing the triggers helps avoid the most common mistakes that cause benefits to drop or stop. Preparing early is the most effective way to protect your benefits under the new system. The first step is to organize your financial documents, including bank statements for every account with your name on it, documentation for deposits, pay stubs if you work, rental agreements, and any paperwork showing how you pay bills. Because the new system may request clarification for small deposits, it's wise to save receipts or written explanations for refunds, reimbursements, and transfers. If a friend or family member helps pay your bills, ask them to write a statement explaining whether the payment was a gift, a loan, or a temporary assistance arrangement. Each category affects SSI differently. Another preparation strategy is completing a self-check of your bank accounts once a month. Look at the highest balance you reached at any point in the month, not just what remains at the end. SSI looks at your maximum balance to determine whether you ever went above the asset limit. If you are close to the limit, consider paying bills earlier in the month or adjusting how refunds are issued. Also check for old dormant accounts with small funds that you might have forgotten about. These accounts continue to count toward your resource limit unless officially closed. Finally, make sure your contact information with Social Security is correct. New rules mean faster notices, and missing a deadline can delay or suspend payments. The most serious consequence of failing a redetermination is an overpayment, and these have become far more common under the new policy. When the system detects assets over the limit or income that should have been reported, Social Security calculates how long the issue existed and bills the beneficiary for every month of excess payment. Some people have received notices for a few $100s, while others have been billed thousands because the issue went unreported for months. Overpayments must be repaid unless Social Security approves a waiver, and waivers require detailed explanations proving you were not at fault. Apart from overpayments, SSI benefits can be reduced or suspended entirely depending on the issue. If your resource limit is temporarily exceeded for 1 month, for example, if you receive a tax refund but spend it quickly, you may lose benefits for that month only. But if you remain over the limit for multiple months, Social Security can suspend your SSI until your situation is corrected. In cases where income increases, the benefit may simply be reduced, but failing to report the change promptly increases the chance of a full redetermination. The agency's new systems give it more visibility than ever before, so even small errors can carry significant consequences. The best protection is staying proactive, not reactive. Start by tracking your finances weekly or monthly so nothing takes you by surprise. Avoid sharing bank accounts with anyone unless absolutely necessary. And if you are listed on someone else's account, consider removing your name or documenting why the account does not belong to you. Report income changes immediately, unless no even small amount, because early reporting prevents large overpayments later. If you receive a notice from Social Security, respond quickly. The new system closes cases faster, and missing a response deadline can automatically suspend benefits. Another key protection strategy is keeping a paper trail for every deposit. SSI rules exempt certain types of income, such as reimbursements, refunds, or irregular gifts, but only if you can prove the source. Make it a habit to keep screenshots, receipts, or written explanations. Finally, if you believe a decision is wrong, ask for a waiver or file an appeal. Both options are allowed under SSI rules, and many beneficiaries succeed when they provide strong evidence. Staying informed, organized, and proactive is the best way to keep your benefits safe under the new redetermination rules. These new SSI redetermination rules and bank account reviews are changing everything for beneficiaries, and being prepared is now more important than ever. If this video helped you understand the new system, please like the video, subscribe to Social Security Post, and leave your questions in the comments. Especially if you're dealing with a redetermination, an overpayment, or confusing letters from Social Security, I'm here to help you navigate it.